Brandon Gentili here. We have the investment portfolio update for this month, July 2022. Just full transparency, this will be something, we don't go into exact dollar figures and amounts, but we go into portfolio allocation and the percentages, and so we can view it month to month. This will be something that is in the paid section eventually. Wouldn't it be fair to everyone to just continually share this on YouTube and put this out into the public? So this will be something in the paid section on the paid blog eventually. So just full transparency there. So let's get into it here. We are officially going to be in a recession. However, if someone has been paying attention at all, they've known that for months. And whether it's the Putin price hikes and all inflation raging all through 2021 every single month, and yet being gaslit 6 months ago and telling us it's Putin price hikes or whatever it is, we have to be able to see through the fog. Governments, politicians are always going to lie. They're always going to do whatever they can do to get reelected. And I forget who said this, but the first role of a politician is to get elected. The first thing they have to do. And the second thing they have to do is to get reelected. So that's just so we're clear here as to what politicians are doing. And again, I think I said this a couple weeks ago, but if you truly are believing of anything a politician is saying, then I have some incredible oceanfront property I just listed in Nebraska. I'd love for you to see. And again, another thing, I think I just posted this maybe on a TikTok or something recently as well. But if you hear anything government officials say or politicians, just automatically assume it's the opposite thing. That's a really good rule of thumb. And not to get off track here, but these are very important fundamental things to understand going forward. If you continually go down the road of believing what especially modern day politicians are saying to you, maybe 100 years ago, 150 years ago, things were a little different. There was a little more honor, integrity in the culture. Even 60, 70 years ago, right around World War II, and that generation is coming back from war, you had more honor, integrity, class inside of politics. And there's still bad things that went on, but the culture is different. And again, we've had a lot of posts about culture recently, and we're going to have some more about the culture of life and just not appreciating and respecting life. And that's maybe changing a little bit. However, we still have massive problems. So we're going to allocate our portfolio accordingly to how life is going. Because at the end of the day, I get in arguments and fights with people a lot over things that are going on and things that are happening in everyday life. So you have to set up your portfolio properly and truly position yourself for what is coming not only in the investment markets, but also in life too, because life is what's dictating the investment markets, whether we like it or not. Culture, life events, geopolitical events, those things are the things that are dictating what's going on in our portfolio. So you have to take that into account. It's not just numbers and charts and risk management and fundamentals and technicals. It's all those things combined and really looking from a geopolitical 30,000 foot view. So my portfolio is conservative and defensive by nature. Really because of the times we find ourselves in and what I just alluded to. Just when people think the bottom is in recessions and depressions, they tend to humble you. So, we're entering this time period when we're officially going into recession. Like we said, we've been there for months. The government comes out with lagging indicators, these trailing things, and oh, hey, we've been in recession. It's 2 consecutive quarters. Great. Well, thanks. That didn't help me now. But just know, again, it takes a year or two a lot of times. In the Great Depression, it took 25 years to get the stock market back to where it was in 1929. So 1929 to 1954, it took that time span to get us back to where we had been. So, these crashes coming in the future here could be worse. I would expect them to be worse, quite honestly. I think they're going to be invisible crashes, though, and they're going to be papered over. Like I say here, they'll be papered over. They're going to print as much currency as possible to try to mask it. But we're going to measure stocks and the dollar against real assets, against real things. We're going to be able to see the crashing of these fake things against real assets, against commodities, against gold, Bitcoin, and it's going to show what's actually going on. Kind of like here, what's going on with the dollar to Bitcoin the last 10, 15 years. This is truly incredible. It has absolutely gone through the floor because the dollar continues to lose value. And that's going to continue happening. And Bitcoin is accruing value because the network is great, but also the dollar is losing value. So this is the dollar and its purchasing power compared to Bitcoin. Mind-blowing when you really see what's going on. And this is what we're going to do, going back and forth between asset classes and figuring out what is valued properly and what is not. So again, this is our second edition of our monthly portfolio allocation. And I'm going to note the changes in the 5 asset classes for us. And again, I'm not an expert. I'm just a student. I always will be. And this is never financial advice, but only what I'm doing and what I see. So here is the overall, allocation for what's going on, the percentage, the pie chart of where things are. And again, I look at bank accounts and cash, Commodities, so gold and silver. We don't have any oil wells right now or anything like that. We don't own physical copper or uranium or anything like that. I wish we did. So that's what's going to be, or we're going through in there. And then real estate, obviously, paper assets, so stocks in the red there, IRAs, can be Roth 401ks for people. We don't have those. And credit card points, whatever it might be. So paper assets. Then Bitcoin I have in purple there, and business value. So what we have in an equity in businesses that we own. So that's another thing that another asset class. Obviously, businesses could be car washes, could be real estate firms, it could be laundromats, it could be any type of different company that you might own. So that's that breakdown of the allocation there, the pie chart. Real estate, positive cash flowing rental real estate. We almost bought a house that we could have been a rental property because we were trying to help a man actually that was living there. And he's not in a great situation, but that looks like it won't work for right now, really just because of the numbers not quite working. Taxes are high. He's got some situations that look like are going to be very difficult. And again, I was trying to get information from him, but the information wasn't coming as easily as I needed it to be. So we were talking with a lot of our vendors there. So again, shout out to them. Thank you. Business is a team sport, as Robert Kiyosaki says, and it truly is. We couldn't do what we do without great vendors, great partners, great people around us that think like us and don't think like us, and that can help be a sounding board for us. So we are currently putting, but aside from that, we're currently putting an equity line on our primary home, which is a rental duplex, technically, and that is a variable rate. And it can go up to 100% loan to value. We aren't quite pulling out all the equity, but it'll be around 90%. We want this cash to be nimble and to be able to invest as things keep crashing in the coming months. And I know you might be saying, variable rate, are you crazy? And I do watch rates every day. And over the long term, I believe they have to go down because of many of the macro things we've been talking about and the massive debt we have incurred as a country. The country can't pay higher interest rates. It's literally mathematically impossible. So they could go up in the coming months or the next year or so. However, I like the HELOC because I can pay it down right away and get rid of that monthly payment if in a crunch. So I do like that, the nimble aspect of having a HELOC or a second mortgage. And I do like good debt. And again, we're not going to talk about it here too much, but I like good debt because that's less equity. When you have cash, you're not just buying ridiculous things with it all the time. You continually accrue assets. The dollar will devalue long term. I like it also because it's if creditors are coming after you, there's very little equity. If you have very little equity, they can't come after anything, so or very little. So it's also an asset protection play as well, having good debt. But you have to be able to manage the debt as well. It's when you're playing with leverage, you have to be sophisticated and know what's going on and understand the risks and the rewards. And not be buying 9 jet skis with your debt you're pulling out. You have to go buy more good debt and more good assets, cash producing assets, hopefully. And right now we're weighted with a lot of non-cash producing assets. Quite honestly, we have a third or so of our portfolio in cash producing assets, but a lot of it's in insurance and in hedges because of the world that we're living in right now. Whether it's cash, Bitcoin, gold, silver. So we'll talk about that here in a second. And again, like I said, we can pay that down on a HELOC, whereas we've done cash out refinances on other properties with lower fixed interest rates. But when you're stuck for that full payment on a full cash out refinance, you have to pay off the entire mortgage amount or refinance the whole mortgage again to get rid of that payment, the extra amount. So different tools are good depending on which job you're working on and which deal you're working on. So right now, currently, we have about 37% in rental real estate. And remember, again, the dollar is debt, like I just said, there's nothing backing it. So the further you can get into good debt, buying appreciating assets, you will win long term as governments continue devaluing the dollar, which they have to do. Mathematically, they have to do. I know, again, some of the other videos we've shown last week as well, talking about CBDCs and what I think they're going to do. And yesterday, we talked about the home foreclosure prediction, which I believe they're not going to keep people out of homes. They're going to just transfer everyone, try to transition everyone to a central bank digital currency. And then you're going to see debts go away. They have talked about these things. This is not me saying this. They've talked about these things. I've read between the lines. It's some of my own predictions, obviously, but some of these things they've talked about half of it, I would say. And the other half, I've just been putting them together in my head and kind of seeing the writing on the wall, seeing the way the winds are blowing, and then making those assessments. So Bitcoin, the digital asset space, and again, really Bitcoin's the only thing. If I have down here the Fidelity, their digital asset report talking about Bitcoin first, and there's Bitcoin, and then there's everything else. If you want to get into crypto or altcoins, that's just, you got to think of that as venture capital, just speculative cash. Bitcoin is its own thing. It is savings technology, freedom technology. Bitcoin has been getting crushed the past month or so, which is awesome. As I was dreaming this might happen. Subsequently, I've been putting some chunks of our cash in beyond my weekly dollar cost averaging as it is dipped below $20,000. I have manually bought some, and I also had buy orders set on Coinbase Pro that automatically purchased on an amount that I had set up beforehand. Once that price hit, then those orders get filled automatically. I believe Bitcoin is an incredible long-term savings vehicle, but Bitcoin, the network, is an even better freedom vehicle. We should think of Bitcoin as something you will pass down to your kids and grandkids and never sell. Just lend against them, hopefully. And remember, the real power lies in the fact that when you own and custody Bitcoin in your cold storage wallet, you have become your own sovereign bank. I'm going to read that again. This is the real power. I've had many people ask me this recently, like, well, what does Bitcoin actually do right now? If that's great. If it goes to $1 million or $10 million in 10, 20 years from now, that's awesome. But what does it do? Like, what does it really do? What does it do right now? The real power lies in the fact that when you own and custody Bitcoin in your own cold storage wallet, cold storage hardware wallet, which we talked about in previous videos and previous blog posts as well, and there's a lot of places you can go and Google how to do that and YouTube how to do that. You have become your own sovereign bank. No one can freeze you out of the system or steal or dilute your wealth. There's Bitcoin, then there's everything else. And then there's Fidelity's research report. There's a one-page executive summary you can read, or there's a 30-page report, which is phenomenal, and I highly suggest reading it. It's absolutely phenomenal. Whether you're a huge Bitcoin proponent or whether you know nothing about it, you're on the fence, unbelievable report from one of the biggest asset managers in the world that's now letting people, their clients, get into that space. So they're a good cross between the legacy system and the new system. And again, we used to have about 35% in Bitcoin, but now it's crashed down in half. So it's about 17% of our portfolio right now. But again, I do expect it to become a majority of our portfolio probably in the next 2 to 4 years. I would imagine it probably really becomes 80, 90% of our portfolio, or of our portfolio. Gold and silver, or commodities, oils, uranium, copper, wheat, corn. This will hedge against the chaos of the market in the coming years. This always plays out well during inflationary times as well. You can see in the 70s, I believe in the 40s as well, played out. Gold has stayed about, and Lynn Alden is great on this subject as well, talking about it. Gold has stayed about even on the year, while almost every other asset has fallen big. It's done its job while silver is down a little bit. Silver is a leveraged play on gold. Again, I would rather store my savings retirement in appreciating hard assets like gold, silver, and Bitcoin rather than depreciating dollars. Rick Rule talks about this a ton as well. If you've held dollars instead of gold and silver, you got crushed over the last 20 years. But if you would have held gold and silver last 20 years or last 100 years, you've been making out instead of holding dollars. We have about 14% in gold and silver spread out across different vaults around the world, which is not, that doesn't, I'm not trying to make that sound scary. That's very easy to do. Many sites you can buy gold on, silver on, you can put them into allocated, segregated storage all around the world. And, we have places geographically around us as well, spread out as well. So we can get to them, bug out places, different places. Again, one of my biggest things is being independent. The more resilient and independent we can be as people, the less we have to vote for politicians and government that will strip freedoms from us and ask them for things. So if we can be independent, resilient in each other, and then help the people around us, the less we need to vote in really the crazies and the nut jobs that are promising you things and stealing your power. And when we ask government to do things for us, they then say, yes, we will. Now give us some of your freedoms. That's all it is. I mean, this is all it is. So it's a simple transfer. You give me some freedoms, I'll give you whatever you want. The government says, we let you in across this border, you just got to vote for us. Just give me your freedoms. It's very simple transfers. Hey, you want stimulus checks? You want to be locked at home and you want some stimulus checks instead? Great. Just give us some of your freedom. Give us some of your wealth long term. We're going to cause inflation. We're going to destroy your purchasing power. Just trade us now. You want that short term little gain? Just give us that long term wealth, long term freedom. And there we go. You want to feel safe, going through the airport? Well, here, we'll create the TSA and Homeland Security and the Patriot Act, and we'll make it seem like it's safe and give us your long-term freedom. Now we're spying on citizens. And it just goes round and round and round. I mean, go through a litany of things here. Stocks and bonds, the paper section. I have a couple percent in stocks, gold stocks, really my company's stock, eXp Realty, Jessica's small IRA she has from a job 10 years ago, and credit card points. Again, the bonds are, really been getting crushed, but they're at 5,000-year highs though still. So there's really not a place that I want to be. Again, we want to buy low, sell high. And again, like I said, I think rates are going to continue going lower long term. But who knows? In the short term, they might not. But again, at peaks, I really don't want to be buying them necessarily at peaks. And again, bonds are bonds. I don't want counterparty risk. I don't want to be at the mercy of the government getting paid back in cheaper dollars. I'm looking, and rates are negative, by the way. So why would I give the current government currency to do whatever they want with it, and then they just give me cheaper dollars back in the future? It makes zero sense. I'm looking at moving the IRA into cash possibly and taking some of the small tax hits so I have full control. Or I may purchase the Grayscale Bitcoin Trust, which is a leverage play, Bitcoin paper play, and I may try to move the cash over to the Choice IRA, which is a Bitcoin IRA where you can invest in actual Bitcoin and hold the private keys. Again, this will be, and again, the reason I haven't done that quite yet is because it does take a few steps to roll it over, and it just, hasn't been, the IRA is not big enough where I've been super crazy about it. Again, there will be a time for stocks in phase 2 once the defensive positions and hedges, the insurance pays out. Then we'll go into dividend aristocrats, cash flowing real estate, lend against those other assets, gold, silver, Bitcoin, to buy cash flowing assets, being more, buying laundromats, buying car washes, being more private placements, real estate funds we're going to build, Bitcoin mining funds, dividend aristocrat stocks. So currently we only have 2% in stocks. Then cash in businesses. I still believe there will be more investments to buy in the cheap in the next 12 to 24 months. This could also be cash or equity you have in businesses you own, private placements, limited or general partnerships. I have buddies that are looking to start up, as I just mentioned, real estate funds and Bitcoin mining funds that we're looking to take on in the coming, next year or two. I look forward to deploying cash there and adding to those businesses in this section, and adding those businesses in this section and helping them in any way we can. And then cash on hand is also a good case. Is good in case our long-term view of inflation is wrong, in case I am dead wrong. And again, I like to prepare for all situations. And if I am dead on wrong, if we experience a massive deflation and the dollar increasing in strength over the long term, then we will be able to use dry powder or the cash to buy many more assets. It'll be a stronger dollar, which will buy more assets for us. I also have life insurance as well that may roll into whole life cash value at some point. I'm going to be talking to my good friend Ron Sneller about that at some point in the future and the pros and cons on that move. Right now we have about 31% in cash. And again, some of my good buddies here that, Austin Hall is an awesome multifamily real estate broker and does an unbelievable job there. And Jared Saluski is in the Bitcoin mining world. So another great guys to reach out to if you have any questions or want help in those areas. In conclusion, as you can see, we haven't really made any big moves in the last month. That will change most likely in the next 30 to 180 days. I would expect sometime later this year, this next third and fourth quarter. So stay tuned. Just continuing to position ourselves. And we have the 2 refinances we are working on to pay off private money lenders and pull cash out tax-free. So a refi on our primary that we talked about earlier, and then one on our rental property we're working on right now. And again, Angelo Scroy, working on the refinances with him, and Belinda Johnson, Community Financial, doing the HELOC, and they can pull up to 100% out. So great places, great people. If you want to talk to them, go, Angelo, like I said, Angelo Scroy, and then Belinda Johnson. So great people to check out. Again, if you want to get a hold of them, just let me know as well. I can get you the information. And again, like I said, I'm trying to stay very liquid, but I don't want a ton of cash in the balance sheet for more than 12 to 24 months because you're paying an option premium, as Rick Rule says, of inflation, which is around really 15 to 20% per year. So that's really, truly what you're paying. So we have to be cognizant of that. And again, I have the shadow stats, how we calculated in 1980, what real inflation was. That's what it is now. It's really probably about 17% a year, true inflation. So as Warren Buffett has said for a long time, again, like we always say, we like some of Warren Buffett's stuff, and then the other half we don't really like. But this one, again, we like one of these. He's smart with this one. Any investment you make has to be beating 20 to 24% each year, he says. Keep that in mind when making an investment. Soon we'll have the refinances finish and really eyeing Bitcoin as I'm setting up to make some big splashes in gold, silver, Bitcoin, private placements, and commodities very soon. So stay tuned. This is in the coming months here. Could be next month. Could be the coming months here. We're gonna have a lot going on and making some real moves, moving chess pieces around. So again, I appreciate you. Your time, your energy is the most important asset we have. So I appreciate you listening to this and reading this. If you have any questions, please throw them in here, and I will get to them and answer them or reach out. And if you know anyone that likes this kind of content or would appreciate this, please send this to them. Please like and subscribe on the blog, on the YouTube channel. And I just appreciate you more than anything, and the fact that you would listen to this. And I really do. So it takes a lot of energy and work, but it's my passion, and it's really, I know it's my calling for 20 years, is to help people, you know, move themselves really into the resilience, independence stage of their lives, so we can be less dependent on government. So that's really what all this is. Money is just a tool. It's just a tool for wealth building, but it's a tool for freedom. That's all it is, to be able to make your own decisions, make your own choices, and not be at the behest of government. So again, I appreciate you. Please share with anyone you like. We saw we got some dislikes the other day on one of the videos. So again, I really love, if we can say the things we don't like as well, not just dislike it. I appreciate the likes and dislikes, but if we can get the real comments going, so that way I can see what is good and what is bad, and what we need to do more of and what we need to do less of. So appreciate you, and we'll see you on the next one. And remember, go check out some of the other videos. Like I said yesterday, the stunning home foreclosure prediction in the last video, in the previous video, the last blog post, and again, one of my favorite articles I wrote and videos I did with the proof we are being divided, with a list of the last 2+ years of all the things every single month the government and the media have done to distract you from what's going on. Do not be bread and circus, the Romans in the Colosseum. Appreciate you guys. We'll see you on the next one.